Hey everyone, I came across this incredible cartoon from 1952 this morning. And I don't know if it's because I'm a huge ham or I love to dork out about stock market history, or there's actually a lot that it has inside of it to teach you. But I thought it might be fun for us to have a little bit of a movie night or movie morning as it might be. And not just because my makeup looks cute right now. But I came across this thanks to the Library of Congress. And without further ado, I'm just going to let this thing go and stop it whenever I have some commentary to share with you guys. So in case it's not obvious to everyone, this little thing kind of ticking across the screen is a ticker tape, right? And the relevance of that is going to become obvious in a second. Isn't that a great pun? Maybe I should have orchestral introductions on all of my YouTube videos. What do you guys think?
In a typical city or town, on a typical residential street, we find a typical home occupied by a typical American family.
Now, note, this is propaganda, right? Like, here is a typical home occupied by a typical American family. It looks like something out of the Jetsons. Remember, this is 1952. We are like less than 10 years out of the Second World War. And there is a lot of, just propaganda happening here. So, let's take a lot of its messaging with a grain of salt. I'll try and make sure to interject, but,
Like millions of his fellow Americans, John Q. Public earns enough money to...
We all get out of cars like that. I mean, this is like the most bisexual thing that I've ever seen, right? And for those of you who are not up on the meme, bisexual people are incapable of sitting in chairs properly, like myself at this moment.
Keep up the payments on a new car. He takes...
And just quickly note, he's able to keep up the payments on a new car, right? John Q. Public is so liberated that he's able to be in debt. What a cool way to teach people how to live.
Great pride in owning a fine, new, long-term mortgaged home that was...
More debt takes great pride in more debt.
Built to last a lifetime. Mrs. John Q. Public no longer finds housework fatiguing.
Yes, Mrs. John Q. Public, whose function is is now obviated entirely, but by the invention of the microwave. And she does nothing but sit there and read Her Fatal Sin, which I'm sure is a pun that I'm not quite picking up on. But oh gosh, the 1950s were a fun time for feminism, weren't they?
Thanks to a host of labor-saving devices, including her husband. Mr. John Q., because of a 40-hour week, has the leisure to dream about his favorite sport.
Because of the luxury of a 40-hour week, has the leisure to dream of his favorite sport. I just think that's interesting that they're calling that out as a luxury that, creates all sorts of leisure time. Whereas, now we're, railing against the 40-hour work week pretty hardcore. I mean, it's not all bad.
Darling!
Oftentimes, in a secluded corner of his private den, John Q. reflects on some of the better things he has done with his life. Insurance to protect his family.
I'm sorry. Can you imagine, like, you're sitting there and you're like reflecting on the best things that you've ever done in your life. And it's like, yes, I'm so glad that I got that insurance policy. It clearly is the best thing that I've ever done. You could tell that, this is really made by people who are like super into selling financial products.
If he is called before his time. money in a savings account for emergencies,
Access to healthcare. It's always been important.
for summer vacations, and to help put John Q. Jr. through college. In spite of the high cost of being a husband and father, John Q. has a private little nest egg. His practical nature tells him it ought to do more
So that's what men are doing with those fish. Finally, it makes sense.
than collect moths.
Let's see, where did I put this thing? Oh, it's...
Yes, just kind of flip through and just as every hotel room has a copy of the Bible, every American household in the 1950s has investment facts about common stocks. I just kind of want to underscore the ridiculousness of that because, I think a lot of the people that I talk to, a lot of clients come in and feel really embarrassed that they don't already understand all this stuff. And I just want to underline that it is inherently complicated, silly, and arcane. And, this is just not how it works, right? So, if you're just like coming to this and you're like, oh, okay, it's your first, introduction to many of these words, that's fine. Be cool. That's totally cool.
Common stock. Do I
How dare you call my stock common?
own any? I don't even know what they are.
Mm-hmm. In that case, it might be a good idea.
Just that quip aside, actually, my stock is common. Common stock means, standard equity that doesn't have any preferential rights. Let's let the cartoon
To get a little information. Let's start with a fellow who owns and operates a company that makes and sells oil drums. Each year, customers buy more and more from our friend because he makes a better oil drum than his competitors. One day, customers demand more oil drums than the owner can produce. He'll have to build a larger plant to expand production.
Okay, fun fact. This is the classical, use case of modern market economies, right? And the place where, this sort of expansion of production or, the classical activity that entrepreneurs were fundraising for was ocean-going ships, which may have certainly, abducted people and moved them from one coast to another in exchange for sale. So, in case you're wondering where the extractive history of capitalism started, the beginning. I just kind of want to, the oil drum manufacturing company doesn't actually seem that innocuous now because I think probably most of the people watching this are not particularly in love with the oil industry, but, it does get worse. There was worse.
He figures it will take about $3 million to do the job. So he decides to form a corporation to sell shares in his business to raise the capital he needs. First, the owner goes to the state government to get a corporation charter and permit to sell shares in this business. Next, our friend goes to an investment banker and shows him the record of the oil drum manufacturing company's past performance and plans for expansion. The investment banker decides to help our friend sell shares in the corporation to raise the $3 million.
Okay, so in the modern day, you usually have already formed a corporation before you go out to IPO, right? You're not usually like ma and pa bunkum in the backyard and you're like, oh gosh, I guess we'll IPO. But, this general kind of flow where you're like, okay, I need some money to do a thing. I will make sure that I have the appropriate stuff filed, and then I will go to an investment banker to help me raise that money is dead on. That's how it still happens.
However, before any shares in the corporation can be sold, certain information must be filed with the Securities and Exchange Commission in Washington.
Exactly how it still happens, especially for equity issuances. The vast majority of securities issuances follow this rubric still.
The investment banker and the owner must swear that the information they file contains nothing but the truth.
Fun fact, the Supreme Court is actually wondering whether or not to throw this out as we speak. But for now, it's still accurate.
Registration with the SEC does not imply that the government approves the stock issue as a good investment, but only assures the public that if any of the material statements about the stock issue are false, punishment will be according to the law.
I have not seen a single perp walk, or executive thrown in jail that should have been thrown in jail in my career, including during the financial crisis, et cetera, et cetera. Would that it were so, Mr. 1952 narrator. But, I think that the consequences for people who misrepresent are perhaps a little bit overstated. And this narrative sort of conveniently ignores the asymmetry of power that often exists between the company and the shareholding public that allows corporate executives to often get away scot-free.
After SEC registration is effective, the investment banker pays the owner $3 million in exchange for a certain number of shares in the Oil Drum Manufacturing Corporation.
Yeah, so this is just a weird nuance. As you're going public, you actually transfer your ownership to. You actually used to transfer your ownership to the investment banker in whole. My understanding is that this has evolved slightly, both because of new forms of going public like the SPAC and, new relationships between investment banker and issuing company. But in general, the investment banker still takes a degree of risk. They'll sort of be this intermediary that sort of takes the shares from the company and kind of puts them into a little incubator and prepares them for their debut on the stock exchange.
The investment banker sells shares of the common stock to people at a price which returns his $3 million investment and shows a profit for his services in selling the stock. Money received from the sale of shares in the business builds a new and better plant.
I just want to underline, it's a common thing that people, get confused about when, they're thinking about our investment strategies, which usually are, just buying shares that are available in the secondary market, right? The regular stock market. Most stock transactions do not actually transfer money to the company like this. Only the IPO or a secondary stock sale will actually take money from whoever's buying the thing and transmit it to the company. Most of the time, what happens is one investor is buying shares from another investor. And for better or worse, that's what we do, substantially all the time. Actually, all the time.
Which produces more and better oil drums. The people who bought the common stock own proportionate shares in the corporation's plant, tools, equipment, and all of its assets.
This is a point that is often lost to investors, right? A lot of the time people think about shares of stock as like lotto tickets where they're, just trying to participate in a line that's going up. But in actual fact, the way that I think about it is we own proportional shares in all of the companies that we're invested in. Right. And, that mindset, I think, has got fallen a little bit by the wayside. And I would love to see a return because it tends to, come with a decent amount of long-termism on the part of the shareholder. I don't know why the thumbs up is being given right now.
Common stockholders elect the directors of the corporation. Directors represent the stockholders and are responsible for the way the business is run.
Note that this is, very similar to the representative democracy that we have here in Congress, right? So the degree to which the directors actually represent the interest of the shareholders, if you're trying to get some intuition around it, I would say it's about the same as Congress, right? In that they can't do obviously, terrible things, or, maybe there's some limit or sometimes they get caught, but in general, this mechanism is not hyper efficient at actually representing the interests of small minority shareholders. Usually you need a loudmouth like me or some kind of white man in a blue shirt to go to the company and make noise in order to get your thing, your points across. You usually build a coalition on your own to influence the board of directors. We haven't even tried to do it yet because we're teeny.
Directors determine the amount of dividends, if any, to be paid out of earnings to the stockholders. Naturally, when stockholders invest in a business, they hope to receive dividends to help pay for necessities.
I love how just it's like, all right, let's just shit on women a little bit real quick. Like, oh, what are you going to do with that dividend, buy a silly hat?
Of life. Within a few short years, an increasing demand for the company's product poses another problem for our friend. How can he fill all the orders? He will have to build more plants and buy more tools to increase production of oil drums. It will take about $20 million to do the job. One way to get this additional capital is to sell more stock to many.
This is called a secondary stock offering, right? So, some forms of companies like real estate investment trusts, for example, will make a habit of coming to market every year to sell new stock to do certain projects. For others, it usually happens, when they're trying to do a thing or when they really need the money or they screwed up for some reason. One of the investment criteria that we use just for, which I'll mention for funsies is, we always try to make sure that the companies that we invest in here are not going to need to do a secondary stock offering anytime soon. Need, right? Like fine if they have a good idea and they see a space for it. But, one of the ways that companies often get screwed is when they don't have enough money on hand to kind of continue operating and they need to sell their own stock at a discount. That can kind of screw over, a lot of small investors.
More people. So the oil drum manufacturing
Podunk, lol.
Corporation votes to send its president to the New York Stock Exchange to see if their common stock can qualify for listing. The corporation wants to list its securities on the exchange so that the additional stock they need to sell will be more attractive to investors all over the nation.
Note, this is a really interesting and subtle point, and it's obviously this is a commercial for the New York Stock Exchange, so like, let's, not necessarily zoom in on the New York Stock Exchange of it all, but sort of think more broadly about listing on a stock exchange at all. We observe, there's a well-documented, sort of tendency for, stocks that are listed in larger exchanges, to have greater liquidity and higher prices as a result. And so like when you're thinking about, what social value or what value proposition do these big exchanges have, that big funny building on Wall Street in New York City, how did it get so fancy and frosted? One of the things I think to internalize is that for most of history, just by being a member of that, kind of elite list of companies, you had significantly greater access to capital on an ongoing basis. That's changed somewhat, because private companies are increasingly able to access larger and larger sums of money, billions and billions of dollars, in various fundraising rounds without going public. But, it still very much is the case that being a public company significantly increases your access to capital. And from the company standpoint, but also from the investor standpoint, public companies rule because you can sell them whenever, you can sell them so easily relative to private companies, which are like, good luck, basically, unless you have something that's really, really sexy and interesting. It's like orders of magnitude harder to sell a company that's on some, the Podunk Stock Exchange, it's orders of magnitude easier to sell stock in a company that's on the New York Stock Exchange or the NASDAQ than it would be on the Podunk Stock Exchange.
Securities listed on the New York Stock Exchange can be sold for cash anytime in this national marketplace. Each year, as many as 100 corporations inquire about listing their securities. Only 20 or 30 corporations are accepted for listing.
So that is a relic of a bygone era. Yes, there's still a process. Yes, there are still standards to be listed on the New York Stock Exchange or the NASDAQ. I'm not going to give anything away.
And then only after a thorough diagnosis of the corporation's financial health.
Oh my gosh. Yeah, that's not a thing anymore. At least to the same degree that it used to be. The thorough diagnosis, the screening. These days exchanges are competing for listings, and so there's sort of at times when a lot of companies are coming to market, there can be sort of a race to the bottom in terms of the quality of the companies that are being listed. Just sort of think back to the .com bubble. If this is super hard for you to get some intuition around, basically during a boom market, any company can be deemed to have solid prospects.
The president of the Oil Drum Manufacturing Corporation. Calling the president of the Oil Drum Manufacturing Corporation.
And again, I'm looking for just one woman that is not either sexualized or characterized here.
Report to examination room B. Attention all members of the stock list department. Report to examination room B.
I so wish that you had this like rectal exam vibe going into any company's public listing. And you do, right? Companies have to get their act together. But it's,
The stock list department investigates the qualifications of corporations examined for listing on the New York Stock Exchange. The corporation must have substantial assets in the form of plants, tools, equipment, and cash.
So companies have gone public without any of these, with the exception of cash. And part of that is a function of just how the nature of a company has changed, right? Like many modern companies that generate a lot of value have no tangible assets in the form of, plant, equipment, and tools, right? Like you just have a bunch of, like overeducated people in hoodies and a bunch of MacBooks. So part of the evolution is, just a change in the way that business fundamentally works. But with that said, it also is the case that listing standards have substantially eroded. And part of that's because, back then, stock investing was still, viewed as like super risky, to the point where if you were a trustee of somebody else's assets, you actually usually would have a hard time buying stock. In like, you couldn't even be like, hey, this is a diversified portfolio, we're long-term investors, yada, yada. You could potentially get sued for any one of those stocks going bad. So, at the time, in order to supply those much more conservative buyers of stocks with stuff that met their demands, you would have this sort of, much more substantial diligence framework going on.
It must have at least 1,500 stockholders who, together, own at least 300,000 shares of the corporation's stock.
Roughly the same. And, there's still a requirement to have a certain number of shareholders. Often in startups, this can wind up showing up, like as once you have a certain number of shareholders, you actually have to register with a local regulator or with, some sort of other, some third party, which can be kind of an administrative nightmare for certain folks.
The corporation must show successful management and sales records.
Again, not a thing.
And annual net earnings at the time of listing of at least $1 million.
I mean, cute.
The proposed stock issue must meet federal, state, and New York Stock Exchange regulation.
That's still true.
The corporation must agree to report to its stockholders at frequent intervals.
Also still true.
If the examination by the stock list department indicates the corporation meets minimum requirements of the exchange at the time of the examination, the corporation's application for listing is recommended.
I love the idea of just like stinging that into like, you're approved for New York Stock Exchange listing.
The Board of Governors of the New York Stock Exchange finally approves the application. And
okay, so fun fact, I've actually been in that room in real life. It is now a conference venue that you can rent out. Just like the New York Stock Exchange itself is now a TV set.
Sees that it is made public.
Extra, extra, read all about it.
Now that the Oil Drum Manufacturing Corporation's stock is listed, its name is abbreviated for use on the ticker tape.
This is where the ticker symbol comes from, right? Pretty cool.
Each time ODM stock or any other stock listed.
Oh, fun fact. So back in the 1950s, stocks were given in they weren't actually at decimal pricing yet. So you'll see this 97 and 3/8 price. That's because the price would there was no ability to trade between 97 and 2/8 and 97 and a quarter and 97 3/8. So one tick would be that huge a change in value. Whereas now the decimalization has been around for a while. We just don't even think about that as being a thing.
On the exchange is bought or sold, the ticker tape flashes all over the nation the price and number of shares traded. A buyer in Colorado wants to purchase some ODM stock. The buyer...
I love it. He comes in with guns drawn.
Buyer's broker in Colorado sees that the last ODM transaction was at $10 a share. The buyer could buy from 1 to 99 shares, which would be known as an odd lot.
This odd lot, round lot stuff is not really so much of a consideration anymore. It does still exist, but I feel like it's kind of like a floppy disk in that, I am one of the last of a generation to actually know what it is.
But our Colorado friend decides to invest in 100 shares, known as a round lot.
Bullseye.
The Colorado broker wires the order to his New York office. The buy order is telephoned to the floor of the New York Stock Exchange. It is given to the firm's floor partner, who becomes the representative of the buyer in...
So this system is now almost entirely automated or technologized, right? And very much to the benefit of end investors. Back then, commissions were actually, there was a minimum commission, and it was just literally a license to print money for people who are New York Stock Exchange members, because every time you bought or sold anything, you would, have to pay them their VIG. Now it's, it's basic. I mean, it is in fact literally free in terms of commissions for us to charge. There's, maybe some cost to, get, our transactions swooped up by some high frequency trader or something. But the overall cutesy mechanism that you're about to see, where people talk to other people and put on fun hats, is just algorithms now. With the exception of some very, very specific and unusual commodity trades, and even in those cases, not necessarily the majority of the kind of situation. Oh yeah, and the fixed income markets, which are just cursed and like Byzantine.
Colorado. The floor partner goes to the post where ODM stock is traded. The representative of the buyer in Colorado bids $10 a share for 100.
So the post where ODM's traded would be manned by a specialist, and all they did back then was trade ODM stock. So their purpose in life was to, sort of come to the stock exchange and say, and make a market in ODM. So that, that again now is an algorithm.
Shares. But at the moment, there is no stock offered for sale at this price. In the meantime, however, in Maine, an ODM stockholder who needs cash.
I have a new ambition in life, and it's to be a stockbroker in a lighthouse. I would love to. That just is, I've always wanted to be a lighthouse keeper, like every woman of my generation, and now I can blend my two passions. Being forlorn and staring off into the vast and careless sea, and also being an investment professional. And now that I've seen this, I know what I want in life. JK, I'm doing it already.
Decides to sell his 100 shares if he can get $10 a share. The Maine broker wires the sell order to his firm's representative on the floor of the New York Stock Exchange. This firm's floor partner representing the seller in...
I love how he puts on like another hat, and I hopefully someone in the comments will know if that's actually like a Maine specific hat or not. I've never seen it before in my life.
Maine offers to sell 100 shares of ODM stock at $10 a share. The price of $10 a share is mutually acceptable, and the transaction is made. Like the cowboy in Colorado and the fisherman in Maine, invest.
That's just an incredible visual. That fisherman sitting in his thing, just like this, like pile of money larger than his head.
Brokers all over the country use the facilities of brokers who are members of the New York Stock Exchange.
In all seriousness, this is a very cool system, right? The fact that we could have a centralized repository of transactions in New York that transmits out across the country and allows somebody, 4 time zones away. It's still not that easy to do business between Maine and Colorado sometimes, right? The fact that you could have in the 50s this transaction happening relatively slick. I mean, granted, big commissions, lots of intermediaries, lots of complexity, but it's cool. It's just cool. It's a very cool piece of capitalism enabling tech.
Whenever they want to buy or sell stock of companies listed on this national market. Yesterday's savings financed the miraculous growth of our railroads.
Fun fact about, when the savings financed the growth of the railroads, they did it in a huge speculative bubble that makes the internet bubble look tame.
Automobiles.
Ditto. Well, not actually as extreme as the railroads. The railroads were like epic. And like make, sort of proto-capitalism at a scale that is hard for us to really internalize because there were no regulations and no, honestly, we didn't even really have a common currency in the US. We had, lots and lots of little random bank scripts that were, yes, it's true. It is, of course, washing over some pretty strange and arcane history here.
Airplanes. Farm machinery. Communications.
I mean, at least he looks happy.
Electric light and power.
I mean, you get the picture here, right? If you can dream it, you can do a stock issuance around it.
Textiles.
Again, just one woman who's not sexualized or caricaturized, please.
And countless other industries contributing to a more enjoyable.
Okay, is the implication here that the stock exchange, has helped kind of, fund pornography? Because that is actually one of the few industries that has almost never had any benefit from, like, sex work in general. The oldest profession is one of the few industries that has never really participated in the stock exchanges. And I think it's a damn shame. Part of it is because of the, maybe with some Puritan legacy of the United States or whatever. But, I think it's fun. It's interesting that we can, put a little jab here about, nudie ladies and nudie magazines and how they, are good and help whatever. But, in practice, when it comes time to actually support sex workers, stock market's been nowhere.
Life. If a part of our savings continue to flow into industry, American labor, management, and capital can continue to build new tools. And
here comes the propaganda, right? So, the idea, here is that it's not just in your self-interest, or at least the kind of 1952 idea was that it's not just in your self-interest to invest in the stock market. It's your patriotic duty.
Plants. Industrial expansion creates jobs.
I think that the robot march of these graduates says a lot about the way that the creators kind of viewed them and thought about, kind of the merits of the workforce, right?
Hundreds of thousands of young people who must find employment each year. A growing capacity to produce things which make life better in peacetime can be our greatest protection in time of war. When danger...
Isn't that fun? Mask off, baby. So, I think it's really important to just kind of note that the existence of strong domestic markets has an incredibly, significant geopolitical role. right? Not just from the standpoint that, one day, it doesn't really take a lot of effort to turn an auto manufacturing plant into a tank manufacturing plant. I mean, it takes a lot of effort, but it's not like, impossible. But, again, like, mask off, right? Like, here we are, hearing about the reason that you should invest is because in case of war, we will be powerful and able to win. And like, I mean, there's something to that, from the standpoint of, like, let's remember that these folks are, something like 7 or 8 years out of World War II, which I have heard was kind of a whole thing. So you could see how that might affect their mindset towards, kind of supporting domestic industry. But, I think, like, not just this, but the example of kind of the slave, or the ships that would kind of abduct enslaved persons and bring them to the New World at the beginning of, that we were talking about is, like, one of the origin, kind of motivations for, organizing these big complex ventures and doing joint stock companies. It is really worth mentioning that there is sort of a history of the stock market that is written in blood. And it is, a relatively, new and niche thing to try and, like, do this ethically, right? Do the savings piece without the war and murder piece. That's still kind of edgy.
Threatens, we can convert industry to produce the thing.
I'm sorry, one more point on that. After the recent, kind of Israel-Hamas war started, kind of heating up, we saw immediately the mask come off again at a lot of mainstream asset managers who started arguing that, ESG should include M for military, because obviously it's so important. I just, gross.
We need to defend ourselves. Common stock investments have helped to make our country prosperous and powerful. Owning a share in American industry is like owning a share in the future of our nation. But remember, John Q, there is a risk as well as an advantage in owning any kind of property. So get the facts before you put your money to work.
I mean, at least they mentioned that there's a risk at the end, right? Yeah. So I don't know. I thought this was fun, and it amused me at least. But I hope you thought it was fun too. And if in fact you did think it was fun, like, comment, share, subscribe. Do whatever. Love you, and I will be back with another nerd out session pretty soon, hopefully. Bye.